The Hedgeless Horseman here. It's July 21, 2022. Just had another wild day. I think silver was up around 1% for a time, and then I think it ended down. Well, now it's down 1%. Yeah, it spiked for a while, then went lower. Gold was, well, kind of even, I think, for most part. Then trended lower. Um, Not much happening outside of that. I think the same happened for, well, kinda US markets. It's like just more and more noise. I mean, I have no idea how anyone is gonna, trade the metals. I don't even uh, consider the metals really. I mean, I think the big edge is. I mean, you can see people all the time on Twitter, etc., saying that gold is going here or there. I mean, typically right now everybody's giving out, lower targets, which is, the norm. Everybody is a trend follower. So if gold has gone down to 1700, there will be, you will hear opinions that it's for sure going to 1600, or that the bear market has started again, and this is going to be a 2011-12 rerun. Yet I find it funny that there's so many people who know what's going to happen to gold, but for some reason there aren't too many billionaires around. Anyway, I mean, we're seeing the frustration levels, which I said in the last video. Every more day of this is getting, exponentially more painful. Even though silver is actually, for example, I think silver is actually up from the lows recently. Well, it went down to 18. Okay, it's not really much of the lows, but it's like, okay, it's higher. It's traded higher than this low here for the last 4 or 5 days. Still, I would say that there's probably more pain today, simply because it's 4 more days of not seeing it really go up, and disappointment because it was up at the start of the day and then down. So it's like that's expectations meet reality, and that's where the frustration gets compounded, let's say. So like I said, I mean, each additional day of this, regardless if it how much it really goes down, it's just that it not going up is the, let's say, frustrating part, because there's more time that you've suffered, which is, I mean, it feels worse to suffer for 301 days than 300 days, of course. So you're starting to see stuff like this. This is a chart of the GDXJ, and like Don Direct tweets here. The bucking bull got another one. Back to the 55-60 level so I can exit this sector. Never look back ever. There comes a time in life when you just have to move on. Obviously that doesn't, I mean, exit this sector. So basically throwing out the entire sector based on the poor performance last 2 years. I mean, if let's say you bought low and stock picked, you probably wouldn't be saying that. I'm not saying that. I really like this sector. Especially the best part about the current environment is that there are really, really good stories out there that are really, really cheap. If this was 2000, some of the, high quality exploration stories with like years of runway ahead of them. If this was 2016, I would probably have to pay 200-300% higher price to get in. Same story, same fundamentals. The price would simply be 200-300% higher, and obviously close, since that was sentiment high, closer to a downtrend. So, like the Chinese, crisis and opportunity are, two sides of the same coin, and that's 100% correct. Some might remember Garibaldi Resources went to like 500 million in market cap before its first assay results. 500 million. Now you have I-80 Gold, for example, with like, I don't know how much gold they have, like 10, 20 million ounces of gold or something, 2 mills, 3, 4 different deposits. That's trading for 500 million. Less than the sunk cost. And Garibaldi in 2016 or 17 traded to that level without a single drill hole. So again, it's like, it all depends on how you look at it. If you want to have a shot at getting into a really, let's say, good story, which might discover or delineate a very, very valuable deposit in a world where discoveries are going down and the metal consumption is going up, so time is on our side, meaning every deposit is going to get more and more valuable pretty much. Now is the perfect time, because I've been buying some exploration companies recently, post discovery plays, and I'm like, thanking my lucky stars that if the sentiment wasn't this bad, I would never in a million years be able to pick up some of these stories at these prices. But this is typically, again, what you see. I mean, this is certainly not for everyone, this sector. And interestingly, it's like almost right on cue, I was going to say, from the peak in 2016, the downtrend, if we count this as the low, I think this was actually a slightly higher low, but let's say it was actually a double bottom. 762, and I think these are trading days. These are trading days. We're almost up to 762 days. And this brought the GDX during these 662, I mean, that's like, over 2 years. Went down, pretty much 50%. So again, imagine not only the paper loss itself, but the duration of the downtrend. I mean, ask yourself, okay, would you rather sit through this like 50% correction that was over within, I don't know, a week or two, or 762 days? Of course, this would be a lot better. Even though, yes, fat paper loss, probably panic, yada yada yada, but it's like if you just held your breath, stayed cool for like 3 weeks or whatever, or let's say this is 25th of Feb. Okay, let's take this. Okay, so 2 months. If you held your breath for 2 months, you would be back to even already. Not the same thing here. Over 2 years of downtrend, and this correction has brought price down to a max point so far of 56%. So again, this is right on cue. Do you think anyone was bullish here? It's so funny. It's like I find it that people believe that they can for sure say that this is a bear market, let's say, that we're actually really going lower. I don't remember people calling a bottom here. I mean, I would say this almost looks worse, because there's like huge horizontal support and then that broke, which is kind of typical. I mean, here, this for example broke higher than this horizontal here. Okay, went up a bit, but then that turned around. So when I see breaking of supports like we saw here and again here, and I mean this just ran through a bunch of support levels, that's typically pretty good. And like I've been saying, I think I'm gonna show a chart. I might do that now already. Our favorite sentiment indicator, Bear Creek Mining. When silver was down today, Bear Creek Mining is, I don't know if they had news out, that would change things. Otherwise, it's up 6.76%. So the most emotional, like wild, risk on kind of junior miner is up 6.76%. I mean, again, I think these are, small signs that there's simply almost nobody left in this sector who is willing to sell. It's like, I mean, think of a neighborhood, for example. Everybody wants to sell the house, let's say. But if nobody is willing to sell their house below a certain point, there will be no sales on houses. There will be no pricing below that because no transaction will occur, because nobody is willing to sell their shares, because in order for someone to buy, someone must sell, obviously. So if we're simply running out of people, regardless of what gold, silver does in the short term, or if silver is down 6%, whatever, if nobody wants to sell a particular stock at a level, there's not going to be a sale. If nobody is willing to sell, for example, Bear Creek lower than 6.65 cents, let's just assume that there's no shareholder right now who's willing to sell for 65 cents or lower, then the shares of Bear Creek Mining will never go below 65 cents, regardless of what happens. So I'm just highlighting this as a interesting thing that yes, which have shown we've hit extreme levels already, and we're starting to small signs of like enough is enough. There's nobody left to panic really. I mean, if I liked Bear Creek Mining, thought that was a good stock pick, I'm like, this is so super cheap, who cares if silver crashes? I mean, it's already pricing in a crashing silver price, and if it doesn't crash, silver does not go to $12 or $10, okay, then it's gonna go up. I'm gonna make money someday. And I find it interesting just looking at these RSI downtrends, which I like to look at. It's like a contraction. This was kind of interesting. Obviously, you can see kind of a lower top trend line here, and when that broke, it's like poop, 100%. Same thing here from earlier than the peak. This was a negative divergence actually. Higher high here in price, lower in RSI. That proved to be the top. And you had this kind of, you could draw a trend line here, and sure enough, when this broke, that started the next leg up. And one could say the same thing here. This was the start of the next leg up from this downtrend that started here. So I mean, I don't trade based on this. I like to look at charts, etc. But you can see, psychology, etc. That lower RSI means that's like buyers are running out of steam. There's most people who wanted to buy are already in, and fewer are willing to pay prices this high. Here we actually had a higher top, but that was a blow-off top. And here we have slight RSI divergence to the upside, lower low, but a bit high on the RSI. Still, again, it's like from a sentiment indicator perspective, when people complaining again about not being able to make money in the sector, and they say that when it's the best time to make money in the sector, because you don't invest backwards, you invest forward, obviously. So okay, if this flatlines or goes down, which has never happened for a long period of time, this was like, I don't know, 6 months. That was since like 2005, Bear Creek Mining only spent 6 months max at or below this level here, and this is when people complain about not being able to make money in this sector and gonna walk away. Again, the irony of us investors and human psychology, when we have the opportunity to make money because the sector has been so poor, we conclude that you cannot make money in this sector. I mean, the horrible past is why we have a brighter future. And this is again just to highlight how I look at things. I'm trying to focus on the forest. I'm trying to focus on the companies. I don't try to guess where gold and silver is. I don't really care. If I can find a junior that increases its value by 100% per year, let's say, over the next 5 years, do I think I'm gonna make money over time? Yes, I think so. And in the meantime, we will have these sentiment swings. Extremely low sentiment, extremely high sentiment, low sentiment, higher sentiment, extremely low sentiment, high sentiment, extremely low sentiment. And that affects even the intact growth stories as well. So here we have a sentiment high, sentiment low, sentiment high, sentiment low, sentiment high. yada yada yada. But the trend is up because there's again, even if the sentiment here is as in the sector is as bad as here, if this company has grown like 200% over this time, it would require a much more depressed sentiment to actually price the ounces in the ground. Let's say they have, again, gone from 1 million ounces to 3 million ounces. If the sentiment is equally bad at these points, of course it's going to be higher valued when it has 3 million ounces than 1 million ounces. So that's the only rational way to invest, in my opinion, in this sector. Bet on the things you can kinda control, kinda predict, which makes, I mean, success is not some irrational, emotional, oscillating thing. A good deposit is gonna have, hits, regardless of what the sentiment in the sector is. And it's like, example, which I've shown before, Great Bear. I've shown how many corrections you had to endure over this period of time. And this was a huge, long one and down around 35%. But that's like being dragged over concrete. This was when it had become very mature, of course, and the eventual sale was $28. So if you just held through this, every correction, and this is the flash crash, for example, even Great Bear, nothing had changed, obviously. Nothing had changed. Gold wasn't even down that much. The project might have gotten better over this period of time. Still, it went down 60%. So, is that a bad thing, or is that an incredible opportunity? That something that has retained its value just could be purchased for 60% less. So let's say this, I mean, we know it got sold for like 1.8, 1.9 billion Canadian. So if you kind of had that as a target price, let's say, I know this stock is going to sell for 28 in a few years. And it goes from $8 down to like 4. You wouldn't believe your eyes, like, Jesus, what an opportunity. And another point, which I'll go to soon, we recently had yesterday or today, depending on your time zone, I guess, Western Alaska put out a very interesting news release. I had to reread it a few times because when I saw it, Western Alaska Minerals intercepts 47 and 101.7 meters of massive sulfide replacement mineralization in drill holes 17 and 18. And I mean, previously they have had hit like what? Their good hits, which got me into the stock, was where are the hits? What the hell? Oh, these are the new ones. Well, these are some of the hits here. True thickness 6.8, 1,400 AG equivalent. 10.6, 979, 8.5, 8. I mean, very, very incredibly high grade stuff over good widths. I mean, this is like, I mean, even at a dirt poor or piss poor gold silver ratio, that's like 20 grams per ton AU equivalent over 7.6 meters. I mean, that's really, really good, obviously. So this is what got me into the stock. I simply thought it would keep growing. A CRD system, they can be very large and they have a lot of runway. Water Pump Creek, I think they're drilling up here right now, and it's like in total with different stuff, and here you have another Mantos mineralization. That's an 8 kilometer trend of lead and soil anomalies, confirmed Mantos mineralization, and coinciding with lead anomaly here, you have chargeability resistivity trend, etc., which kind of gives us a clue of where the mineralization can be. You can see the scale bar here. This is 1 kilometer. and I think they're drilling up here right now. So I mean, talk about blue sky potential, and it says the 47-meter thick intercept that lies just over 200 meters south and 30 meters west of WAM.V's 2021 discovery drill hole. The 101 meter, another 50 meters south of 17. Okay, so one is 200 meters south of the discovery hole 9, and the next one, which is even thicker, 101 meter, unknown true thickness, but incredible thing is that this 47 meter interval has an estimated true thickness of 38.5, so like kind of orders of magnitude thicker than any hole they've hit before that. And I think this is the discovery hole they talk about. So that's like 200 meters down, and then 50 meters and 20 meters to the west. So I think it's maybe around here. And then the 101 meter intercept is like 50 meters more. So, and you can see the outline here, strong sulfide mineralization potential, and you can see this is basically, you know, kind of a bed, I guess, or how you would call a CRD system. And they believe, I mean, they allude to in the news release that they might have hit a chimney, basically, I think, you know, feeder zone, for example. And I think they say that about a 101. Basically, I mean, if you drill close to this feeder zone or into it or whatever, sure, you could hit, you know, that would not be true width, obviously, because you would be drilling down a pipe, let's say. So that remains to be seen. I'm not 100% sure if that's actually the case. And they're not even sure either, but it's like they can obviously kind of conclude that the 47 meter intercept is almost 40 meters thick, true thickness. So that alone is like, I mean, if the 101 meter intercept has, I don't know, true thickness of 40 meters or whatever, or it's not, you know, straight into a chimney or whatever, or even if it is, still 101 meters of 101 meters of massive sulfide mineralization. And that's on the back of, I mean, they have these are other holes. So you can see the like true thickness meters, the previous drill holes they drilled this season. You see the range from about, you know, 2.1 up to 17.2. So these are like 38.5 or 47 net width, or I guess drilled width, and 110. That's like way beyond anything they've hit so far. So again, you can see again the scale. I was gonna show one more thing. I think here, interesting. I love it when they have slides like this, because most people do not calculate potential resources, etc. That's one reason why I like Quinton Henney and Crescent Capital, because they outline basically the target. But they have a pretty simple, you know, mental exercise here or experiment. Needed footprints. Okay, if they have a grade of 1,422 grams per ton AU equivalent, the zone is 7.7 meters thick, 100 meters, let's say, width, 360 meters long. That's 1 million ton at and a market cap potential of 253 million. That's not too high, right? Okay. Implied share price 5.49. Okay, that's 1 million ton. Crescent has, you know, blue sky target of 10 to 20 million ton. So 5 to 10 times this. And again, if you go up to 40, almost 40 meters thickness, if this grades are, you know, somewhat like that, and they hit 110 meter intercept 50 meters further south. I mean, I think this was like be, I think it's gonna be way bigger than this. And if we think about it, okay, what happened with this news release? Price obviously jumped big time. At some point, it was up, I don't know, 122% or something. It's an incredibly tight stock. But okay, what does this news release? There's always going to be people who like, yeah, this isn't proven. We have to wait for assays or whatever. Yeah, of course, but like, it's our job to be, make educated guesses on the future. It's like what I have said sometimes before. It's like in my opinion, the most important thing or important takeaway of any news release is what it says about the next 5 or 10 news releases, which typically the market is not pricing in. So, what does this mean, the news release today? I would say it means that, I mean, I didn't expect this kind of result, and yes, we don't have the assets, etc. But to hit 47 to 101 meter massive sulfides, like 50 meters apart, 2 to 250 meters from the other high-grade discovery hole, I mean, that kind of tells you that there's some real size potential, and we obviously know it has grade potential, and it's wide open. So let's say that the probability of getting to 10 or maybe closer to 20 million tons actually increased. That's a huge jump, obviously, because if you look what they reckon that 1 million ton would be worth. 1.6 million ton, 380. 2 million tons, 506 million. 2 million ton, 506 million. And Crescat has a target of 10 to 20 million ton blue sky. Question: do you need to be 100%? Do they need to be 100% correct on that? No. What would they require for this to be a company maker? I have no idea. Maybe 2 million tons, maybe 3 million tons. But the target is 10 to 20 million tons, and I'm already seeing, which we typically saw. You can bet your ass that what happened back here. I think remember, I probably thought the same. That when you had, Bear Creek jumped probably around 100% within a day or two, and immediately people say, congratulations to holders. I missed the boat. I don't want to chase this, etc. And like I've said before, when was the actual big returns made? Was it made in this period of time or this period of time? Where the hell is the other? Yeah, okay. So was this 100% jump here, let's say, was this the big price in Great Bear? No, this was obviously the big price. That discovery hole told everyone that this might be a very robust, large, and high-grade system. It turned out to be that. But you don't prove up that in one day with 1 or 2 holes. But I get it. It's human nature to think that because we're so not used to any kind of up movement now, and everybody wants the success, and everybody thinks that the case was. Seriously, it's like, given how hard it is to make to hit holes like that, it's like if your strategy is, I'm gonna be in early stage explorers, hope that the 1 in 100 that hits a hole like this, or 1 in a 300, I'm gonna be a part of that story, and I'm gonna sell on a double. Then you're missing the whole point. It's like, that's not the Lassonde curve. The Lassonde curve is a long period of time, let's say 1, 2, 3 years or more, which was the time it took for Great Bear to actually reach its potential. You got paid to wait. So it's like the story just got better because I never expected to see such holes. I'm not a CRD expert, obviously, but to have those kind of hits, it's like, yeah, this could be very big, could be very high grade, could be I mean, they don't need to drill that much with those kind of widths if the grades hold up to prove up way more than 2 million tons. And again, they have 2 million tons or 2.2 million tons set at a potential market cap of 506 million. That's for 2 million. And this could be a hell of a lot larger than that. So okay, if it's 500 million would be, I don't know. Let's do it quick. Let's just say 500 million. 500 million and divided by 126 times the share price 3.29. That's $13. So according to the companies looking at other companies' valuations, $13 would be, let's say, blue sky, would the inferred value be if they hit 2.2 million tons. Crescent has it again at 10 to 20 million tons, which is 5 to 10 times higher than 13. So this level times 5 to 10, let's say. But let's say a 5, because that's obviously more probable than 20 million tons. But that would still be, $70 per share. So that's the potential they believe this is. So in that case, is this too late? Did anyone miss the boat? I'm not saying anyone to invest just because I own shares and think this is more of the beginning of things to come, like in Great Bear, and this just increased the odds of actually reaching a very high blue sky case. And if they hit those kind of holes, they won't be the last kind of holes that hit 40 to 100 meters massive sulfides. That I can pretty much guarantee. So the question is, what will the market think when we get more holes like that, or when the market, or they have inferred potential of X million tons, let's say. That's what we're front running, what people are gonna feel about the fact sometime in the future that has not arrived yet but look likely to arrive, especially again if you up your intrinsic value by 200%. Yes, I think people will feel better about the stock than they did when it had 66% less intrinsic value. So again, just my opinion. Still, let's call it high risk, high reward. But given that this would be 2 million ton target, this excludes any dilution. So let's say it's actually, let's say some dilution. Let's have it here, okay? $11 per share. That's for a 2 million ton target. And Crescent has the potential set to 10 to 20 million. So this is 10 to 20 million. What happens if it gets in the ballpark and Crescent Capital, Quinton Henney is, somewhat right? So in that case, is this early or late? This obviously, given the results today, this looks more likely than yesterday, before the news release. So is that, what is that worth? I mean, the market cap jumped, I don't know, 60, 65 million. Who knows what actually, if you calculate the blue sky potential, which increased with today's news release obviously, and then calculate the implied value add, probability adjusted, of reaching at least a material blue sky scenario, that obviously increased as well. And we already know they are up to 250 meter strike at least, and there's a bunch more. There's a bunch more potential, obviously, because this is an 8-kilometer trend, and just in this slide, that's like, what is that? 200 meter, 250 meters, let's say to like 500 meter, 700, and it's open down. So it's like, how big could this get? I don't know. but right now it appears to be getting even better to the south, etc. Yeah, again, not investing advice. Western Alaska has suddenly jumped to a pretty big position for me actually. So, like I talked about, for Crescat spreadsheet and my own portfolio. So I mean, if I think Western Alaska is right now over a 5% position for me. I think it's actually perhaps all the way to 7. Anyway, if this alone gets close to this target within the next 2-3 years, that could save the portfolio alone. And let's say they keep on drilling. I don't think they will have a problem raising money with this these kinds of results. So you can probably consider them well taken care of. They will not go bankrupt or anything like that, because there's not many companies that hit anywhere near these kinds of so far visual assays, or this kind of core, let's say. So if this alone gets close to 10 to 20 million tons, or at least 2 million tons, I mean, that's enough. Okay, that would be like a 3-bagger. That would materially help my portfolio. But that's not obviously even close to the target Crescat has in mind. So if you just held a stock like this, let's say, just let it ride like a bear creek, a great bear, and you just sucked up the corrections, yada yada yada. You just let it grow. As long as it looked like it had probable growth, you just held on. Sure, it would overshoot, it would undercut, it would overshoot, undercut, and then bam, get sold. Great bear alone could save your portfolio if you just held it for 2019, 20, 21, 2-3 years. One story that worked out. And the best thing again about the sentiment right now is that you can get in at fairly, typically very cheap levels. So what happens if you buy a high grower or a probable growth stock at cheap valuations because sentiment is poor, and let's say 2 years from now they will have increased the value of the underlying intrinsic value, and you started buying it here, and let's say you did something similar here. Okay, so let's say they add, let's say just take Bear Creek for an example. Let's say it adds, I don't know, like 200% value, and you have at the same time, over the next 2 years, you have the pendulum that always swings has swung back to at least this kind of hype levels. That's like, let's say 200% added intrinsic value, then let's say 200-300% boost in what the market puts per ounce or potential or whatever. So that's like 2 times 2 or times 3. So anywhere from a 4xer or a 6xer, because sentiment will change, and if the company you own, which you were able to buy cheap, has added a lot of value, and when we get here, the value will be worth more. That's why you have these higher, typically higher highs and the higher lows. And one last thing, it's like interesting. I find just looking at gold here, I just find this interesting. It's like the RSI is coiling at way oversold levels. You don't typically see this. I mean, if you look at when we reached a level this low, or even at least below this level, you see typically it's like a day or whatever. It's like an event, which some people say a top is a process, a bottom is an event. So in that case, yes, it makes sense that it's an event. It's like, a final flush, and then bam, we have a bottom. But now it's consolidating, or how you call it actually, at this level. There's not been a quick bounce back. So, okay, what times did the RSI contract or consolidate or whatever you want to call it at this low. I don't know if you would call this, I mean, this was a more of a spike and then back, but let's say this was actually some kind of consolidation. And you see this is obviously in the ballpark of a bottom this period. Yes, it went lower. So let's say maybe we're here and we're in for a final flush here or something, which would break all the supports here. People would panic and like, I'm leaving this sector forever, I'm never buying gold, and then bam, up. Because this was the other time it kind of, you know, coiled around down here, and that was again a major flush out. You know, this was the 2000, or was this Brexit? No, this was Trump's election, I think. I think this was actually Brexit. And another time when it kinda coiled around, that was the major bear market bottom in 2015-16. So I just find that interesting. It's like other times RSI has like this gold has been sold like oversold like this and started to let's say not be able to pick a path. That's been the 3 other major bottoms prior to this one, because every other bottom more of a spike. So I guess whatever happened is going to be pretty big, and we've seen, you know, the sentiment is pretty much extremely low. The COT report looks good, so everything from a contrarian perspective screams that this is, you know, most people have sold out. And you can look at sentiment. Nobody wants to touch this sector, and I think it's even more frustrating because the world is so crap right now, and people still can't see gold, the paper gold getting a bid. But we've read about Chinese demand and physical demand, etc. So it's like what most people fear is that this is a, you know, copycat of this period, that we're basically here now. I don't buy that at all, because I guess that would imply that the dollar would keep on going up, and sure, that could happen, but that would destroy the world even more. And you see, I mean, every day now we get worse and worse and worse and worse headlines from all over the world. So again, even though the dollar might go up or whatever, gold typically fronts run a lot of the stuff, like what comes after. So I don't even know what would happen for gold to go like this, because the world can certainly not, in the state it is, cope with a ever rising dollar. So something would need to be done, otherwise the world would implode, and then gold would moon, and probably paper gold would collapse, because like I mean, wouldn't be enough gold to go around if the whole world implodes. So I don't buy this at all. I just look at the news out there and look at the physical demand, etc. So I don't have this as even a scenario, because it's almost predicated on the fact that, you know, all else equal, yes, the gold will just or the dollar will just ramp and ramp and ramp, and then it's gonna top someday, and the world is just gonna, you know, like it's some kind of typical cycle. No, we're in like the end game of the greatest global bubble ever, and the US is not in great shape. So yeah, no, I think we're nearing the end. Something will snap, and I sure as hell wouldn't want to be in anything else really than precious metals, real assets, unlevered, because that's the other option. So am I going to be in fiat given what's ahead, given the inflation, given the yada yada yada? No, I think this paper price is kind of a joke, and the COMEX is sort of being drained. I think COMEX has the lowest gold in the registered category since sometime in 2020. and the silver has been the silver inventories at COMEX have been dropping, so it suggests that prices are too low and physical metals are leaving on a net basis the COMEX. So I don't think they can push this too far, given how the state of the world and given the worsening state of the world as the dollar goes up. So I think there's no way. I don't think it makes sense at all to expect a multi-year downtrend in gold. I see an implosion. Sure, we might actually get deflation, etc. But I mean, yeah, it's. I think the patient, which is like the global economy and fiat system, it's terminal, and we're just going into the late stages of it, where like the dollar goes up because it's like a margin call on the rest of the world. But the dollar is certainly not in a good shape. The US is certainly not in a good shape, and they will need to do something. And I think that's when I mean, if what 3% of the world started caring about gold, gold would jump in a heartbeat. So I think we're simply waiting for that realization that there's nowhere to hide really, and that even though the dollar is going up right now, it would probably destroy the U.S. as well, and then they would need to print even more money, etc., etc. Just my 2 cents. Again, I can't find anything that makes more sense to be invested in when you look at every possible scenario that might happen in the future. Consider me biased if I talked about any stocks. I own shares of Western Alaska. They're not a sponsor, at least yet. I would be happy to have them on. But consider me biased anyway. And do your own due diligence. I'm not saying to pile into Western Alaska. If anything, well, I'm holding. But yeah, more of an example of how I think one should think about the junior sector and why probable growth post-discovery Lassonde curve style investing is, in my opinion, the strategy that makes absolutely most sense and makes you kinda unsensitive, if that's a word, to the price of gold or silver or whatever, because you're focusing on the growth trajectory. Simply that they're gonna find more metals. So even if Mr. Market is depressed and prices ounce in the ground, gold ounce in the ground at $15, and 2 years from now it also prices is at $15. If your gold junior has 200% more ounces, that's more to price in. So you'll probably be up. And if you have proved up 200% more ounces, and we go into a hot environment where the ounces per ground is valued at $60 per ounce, you can imagine what the share price is going to be, or the value of the company, or price of the company, more accurately. Anyway, hit the like if you like the video. See you later. Bye.